Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Big Deal. In the last few months, we have seen a very cataclysmic change when it comes to the overall M&A scene in India. The Indian promoters, the Indian companies have gone again overseas and made some multi-billion-dollar acquisitions. So that's a big change. Does it call for the revival of mergers and acquisitions in India is the big question we are posing on the show today. And I have with me two fantastic ladies who are successful deal makers, Mody as well as Manisha Girotra. Thank you so much for joining us on Big Deal. First, coming to you, Manisha, you have, in the recent past, you have worked on three very important deals where the Indian companies are going overseas and acquiring. There's been Hindalco Novelis, Aleris after Novelis. There is also Intas buying out from Teva, and also the other one, which is not in the public space here, but Anil Agarwal also buying out Anglo-American stake. So these are large transactions. What do you think? Now the Indian promoters are ready to take that huge stride overseas?
Yeah, I think so. A very positive trend that we've seen in the last 12, 15 months. And, conversations around the lines of the transactions you mentioned are very alive. I think that's changed from what was happening in the last few years where, you weren't seeing that kind of outbound. You were seeing select outbound. You were seeing outbound from pharma companies who wanted to buy products or, wanted to buy platforms or certain markets to sell their products in, or tech companies who were moving up the value chain because they need to differentiate themselves with the clients in the whole new digital world. But I think what wasn't happening because of a multiple of reasons, which was basically people were busy domestically or people didn't have the kind of balance sheets available or the access to capital, the aspiration to become large international companies wasn't being demonstrated in the last 5-7 years. We saw it a few years ago, 10-12 years ago, with Bharti acquiring Zain or Tata's acquiring Chorus or Hindalco acquiring Novelis, the first stage of the Aleris acquisition that you mentioned. But we didn't see that for the last decade. And it's really, it's really important that a country as large as India, $2 trillion economy, has some international giants. And, I think that's the track we are on, which is very positive.
All right, so it's very positive. Let me take the same question to Zia Mody as well. Zia, you've been a confidant to many big corporate houses in India. What are you advising them and what exactly has changed there?
So I'm not sure there's a complete revival, as you say, but definitely these sort of deals have not been seen in the recent past. And then you sort of reflect on why is it so? And probably the reason is in the asset quality of the transaction and the deal on the sell side. You see UPL that has virtually doubled its top line and really bought over an asset that has basically doubled its size. You see Kumar Birla getting more adventurous yet again out of India. But I'm not sure that this is a trend, if you like. There are still very many trouble spots for conglomerates back home. And with the cleaning up of the bank balance sheets and the NPAs coming to the forefront, I think there'll be a lot of houses who see opportunities here which are also attractive. But as India Inc. always does, if there's a good deal outside, they will surely gravitate there.
That's right. But Zia Mody, you also mentioned about conglomerates looking inwards. So there is a lot of streamlining of their internal operations also that is on top of their mind right now.
Well, some of the big houses definitely are looking to see how to restructure, pare down debt, reorganize. And some of the Indian big houses are simply looking at good deals here. You've seen the Dirty Dozen and the interest that it has attracted. We believe that the list which will come out will have 100+ cases, for which there will also be acquisition interest and activity. So I feel that the Indian houses are definitely going to turn their eye inward as much as outward. I think more inward, just because to set up something in India now on a greenfield basis is so long, so difficult, that when you can get an asset and turn it around and get started without the greenfield phase of the project, I think that is immensely attractive to not only Indian houses. You see foreign strategics, and as you know, you also see a fair amount of private equity interest, which are teaming up with strategics.
All right, so Zia Mody, you touched on several points, and we will, yes, talk about the dirty dozen and the way the entire stressed asset space has really developed. But first, I want to handle this cross-border M&A. And Manisha, is there enough interest from strategics into Indian companies as well?
So Nisha, if you see what was happening till about in the last 7 to 10 years, we saw very active private equity. Private equity first started with minority deals, then got more comfortable. As you, I don't know whether you recall, but there were early exits in terms of care hospitals, Advent selling out to Abraj, or multiple other exits, KKR selling Alliance Tire to Yokohama. All of that gave private equity a lot of confidence. Right. They started doing control deals. They bought listed companies. Advent bought Crompton Greaves, and multiple other listed company transactions happened. So private equity sort of saw a huge jump in the investments coming into India and became a large pool of capital. Of the 80 billion M&A in India in the last 2 years, 40 billion is domestic, 40 cross-border. But of the 40 cross-border, 17, 18 became private equity. But that's good. You know, we needed the private equity capital. They came in, they supported and backed entrepreneurs. But I think what's now heartening is that you're seeing the strategics coming back, and that's important because strategics have more long-term view. They're not in a rush. The nature of private equity is given 3, 5, 7 years at best, they need to exit. Strategics are coming in to be a partner. You've seen the Walmart Flipkart deal. So I think that was much needed. You're seeing all of the Chinese investors coming into the tech and e-commerce space. And I think that's sort of more long-term capital. And I think India needs that, you know, because we are a country which grows slowly, has its own hiccups. We go into elections every 5 years, and you need capital which stays with you through these ups and downs. And I think some of the few deals that you've seen of the recent past, with capital coming in from US, Europe, is very heartening. Because if you speak to any of the global investors today, Nisha, India is a compellingly large economy, right? We're a 2 trillion economy, third largest growing in terms of just incremental GDP, fourth largest auto market, second largest smartphone market. And don't forget, all of this is happening when the rest of the world is slowing down in terms of just the usage of all these products. So, you know, it's hard to ignore a market like this, which has, and of course we know the large middle class consumer. We know all the positives. So I think strategics are today looking at India more positively. And, you know, we, of course, as you know, the whole reforms around the whole FDI investment, lifting of the ceilings has helped in some of these strategics coming in and taking a longer term view.
Yes, consumption theme has been one theme which has been keeping us alive on the deal street as well, Manisha. But Zia, which are the sectors that you are looking at to be most active when it comes to cross-border M&A, and also which geographies are the ones which are looking most active with India?
So I think traditionally India has, if you like, felt comfortable overseas, in Europe, sometimes in America, Canada. Less acquisition focus on Japan, very little in Australia, barring the 2 big houses that we hear of, Adani and GVK. And so I think that that will probably stay the focus. What type of sectors? I would think, again, it depends on how much technology is available from the acquisition to transport it back home and re-engineer and retool for the world market. I think that where there are synergistic areas of interest, you see Bharat Forge has traditionally always gone and bought smaller companies in Europe and done extremely well with that platform. But I also see some of the big houses divesting some of their overseas acquisitions, simply because with the passage of time, it has not proved to be meaningful, or it has become non-core. And the money tied up and the capital that can be released can be better deployed back home or in some other area.
Right, but Zia, Manisha was also mentioning about the private equity interest here, and that has really provided the much needed long-term capital for Indian companies as well. How do you see this landscape, and has it also changed Indian setup when it comes to promoter-driven companies, because the private equity involvement would also change when it comes to the corporate governance point of view and more transparency point of view?
Absolutely. And I think that's a phenomenon that will probably be here to stay for a while. And it's an obvious one. Private equity has an honest, clean check. and the strategic provides insights that private equity would have to learn at a cost of many years. So the platform looks obviously attractive. And we're seeing that play out. If you looked at the recent Fortis bid, where you had so many people competing, if you look at each one of them, you had TPG Manipal, which was PE strategic. You had KKR Radiant, which was PE strategic. And so these platforms basically brought to themselves, I guess, the confidence of deeper pockets as well as strategic know-how, so that the inner insights into the business would work well to the advantage of private equity. You see platforms coming up for distressed debt, where again there's private equity and a strategic Indian player. These platforms are continuing across the board in real estate, in distressed assets, in healthcare. So it's proving to be a sensible and attractive combination for now.
All right, Zia, Manisha, hold your thoughts there. We have lots more to discuss on Big Deal. We'll slip into a short breather and come back with more trends that are emerging in the Indian M&A landscape. Stay tuned. You're watching Big Deal, and I have with me Manisha Girotra and Zia Mody with us on Big Deal. Now, Manisha, Zia made a very important point about new types, private equity money coming in, and you've spoken about it as well, but new types of M&A and new types of funding, even platform funding, but the entire pool of capital has really widened right now. We have seen that.
Sure. I think within the private equity, we are seeing very different trends. You typically saw some of the large private equity investing in minority deals in India in the first few years of private equity in India. Today, you're seeing domestic funds. A lot of individuals have gone and raised funds. Those coming in and competing with the large funds because they can be backed by the LPs. What's also a very heartening trend is that you're seeing the sovereign wealth funds and the LPs come in on their own and invest in minority transactions, especially because they want to take a direct play into these companies. And why do I say that's positive? It's basically because it's long-term patient capital. It's the theme we were discussing earlier in terms of strategic money.
Why do you think this trend has changed? Have they become more comfortable with India that they want to come and directly invest?
Absolutely. I think they came in as LPs. They came in partnership. They liked the companies they met. They felt comfortable with the entrepreneurs. They want to write larger checks, and they want to come in with direct exposure. A lot of them have set up offices in India themselves, so they feel more comfortable around India. And you've seen this trend in other geographies where they've got comfortable, in Europe, etc. So we're seeing the same trend come in here. And as you said, a lot of platform transactions, distressed transactions, partnerships. Apollo tying up with JSW, a lot of those kind of transactions. So different pools of capital coming in, both into debt and equity, is a positive.
Yes, and Zia's firm, AZB, has also been working very, very closely on especially the dirty dozen. Zia, in your assessment, till wherever we have reached so far in the distressed assets resolution space, how do you assess it? Have we been a success so far?
So frankly, I'm quite optimistic, and I'm personally very pleased. If you had seen this sort of process play out in the span of 2-3 years earlier, you would have been aghast, because you never thought that the system would lend itself to such relative speed, if you like. Today, if you look at it, with the push of the government and the way the RBI has basically indicated its point of view, banks have come, offered up their balance sheets to be provisioned. I think in some cases been surprised at how the auctions have yielded far better results than they would have expected. And according to me, this is the space that will see probably significant M&A activity even after the first dozen have wound their way into a resolution. It's basically going to be driven by just the thought of having an up-and-coming, ongoing manufacturing activity in India, which otherwise, with the permissions that you require, the environmental clearances, all the PILs that are filed, the socio-economic studies that have to take place, it's far too painful.
Right, and what do you think about Sashakt? How far will that go in resolving the issues?
So I think the Sashakt program has to play itself out, and it is really an interesting one, because what it essentially does is to get the major banks, and for that read State Bank of India, to really take the lead in terms of trying to find a binary solution outside the insolvency and bankruptcy code for a period of 6 months. It basically gives breathing space. I think it allows capacity to be built. It also allows possibly the promoters to relook at their own assets without being seen as ineligible during this period. It allows competitive bidding as a synthetic IBC so that the banks and financial institutions are protected from the ghost of the CVC, CBI, etc. So I think both the programs running in parallel should achieve fair amount of closure. And after all, that is what we are looking for, right? Closure and a new beginning.
Oh yes, Zia, Mody, as well as Manisha. Also, we looked at the entire space of IBC really evolve with each transaction, and later it became much more competitive, like we've seen in the case of Binani Cement, even in Ruchi Soya. So competition between the Indian strategics has been fierce in this space. But when we look at the global transactions, we have a couple of them going on in the consumption space as well now. Horlicks, Complan, and many others. PNB Housing Finance is also on the block. There, how do you see the global and strategics really play it out, especially in the consumption space? And are the strategics really able to raise their bar when it comes to pitting themselves against the global players?
Sure. So, Nisha, I think you referred to it. I think you're seeing two diverse trends, right? On the NCLT bankruptcy cases, you're really seeing the Indians hustling and coming out as winners. Binani, you mentioned, Binani was fought with a lot of global strategics in there too, but I don't think they felt comfortable paying the kind of values or just felt comfortable with the whole environment around bankruptcy as the Indians did. So I think there you've seen Indians coming out as winners, and I think that trend will probably continue. As you said, on more of these global assets, especially which is playing to the consumer theme, pharma, tech, you'll see the global where there's less regulation, which is playing to the 400 million Indian consumers. You see the foreigners coming out and hustling as hard and willing to pay multiples. You saw the Intellinet deal, which Blackstone sold. Teleperformance bought that. There were domestic strategics in there. They lost out. So I think in those spaces, GSK you mentioned, Heinz you mentioned, you're seeing the globals and the Indian hustling. And there I see global players with the kind of liquidity access they have actually outmatching the Indians.
All right, so we still have to go far when it comes to that particular space and competing with the global players. But we'll slip into a short breather and we'll come back with more on what are the trends that are developing, which sectors are going to be active going forward. Stay tuned to me. So Manisha, what are the trends that we are seeing developing now going forward in terms of themes? What are the new themes and which are the sectors which are looking most active?
So if you look at outbound, it's basically Indian companies having international global aspirations to dominate the market, which is different from what it was earlier in terms of just product platforms or specific markets. That's a heartening trend. I agree with Zia that it's not like gone viral, but it's a positive trend.
And still will continue.
And will continue because there are lots of balance sheets which are robust, and there are a lot of companies which want to have global scale. Basically, whether it's within India or globally, companies want to now dominate. Through the digitization of the economy, formalization of the economy, you're seeing consolidation happening. So that's a positive trend. Then outside of India too, they want to dominate in scale, some of the larger groups. So you're seeing that trend continue. Okay. Private equity we discussed. Parts of private equity feel very comfortable on consumer, tech, pharma space. That will continue. I think what's really heartening to see is, thanks to all the FDI relaxation, etc., capital coming into infrastructure and real estate. Last quarter itself, we saw 2 billion come into real estate, GICs of the world, Brookfields of the world coming in and buying. That's good too, because that was a sector that really needed capital. You saw 10 years ago, you just saw cranes in Bombay. That's changed. So that's another positive trend, because we needed money to come into infra and real estate. Right. So that's sort of the diversification of trend on private equity. And as I mentioned earlier, more of the long-term capital coming in through sovereign wealth funds, both in debt and equity. That covers the outbound and the private equity. Within inbound, again, as we mentioned, what's positive is that it's not just private equity capital, it's more strategic capital coming in. And more of the strategic capital is coming in from the larger markets like US, or markets which are slowing down like Europe, or then China, more specifically into the fintech tech sector. Right. So broader base capital coming in, which is always a positive, because you're not dependent on one economy, one geography or one economy. You saw that in the past, US would sneeze and India would go into complete coma, and I think that's not happening anymore, because domestic pool of capital is available, as well as a wide spur of capital is available from different geographies.
Right. You mentioned infrastructure, and yes, many deals are now starting to take place there. Zia, Mody, what do you think? Which is the sector looking most active for you?
Healthcare, pharma, you're right, consumption remains extremely attractive. I think, it's probably high time the government started thinking about the reality check of this whole unnecessary, in my view, distinction between retail and the back end. I think that foreign direct investment in real estate remains, as I understand it statistically, still the largest puller of FDI into the country. So the opportunities are immense. I think even though we are coming into elections, which definitely will have a slowdown and a pause effect, I think that the growth of India and the India shining story, according to me, has not dulled in any significant way.
And I am glad that you raised the election year. You pretty much read my mind, Zia. So what do you think? Is the deal street going to slow down, and will the corporates be on a wait and watch mode in an election year?
Seeing an election round the corner, and round the corner is round the corner for us now. If they are taking a bet on India, if you like, we'll want to wait and watch. But I think the strategics who are already here understand the India story, have tasted the Indian landscape and the returns that it has gotten, will not necessarily be too dampened by the oncoming election. Private equity also, I think I have not seen too much of a slowdown. I think that once there is a deal, and most deals are being auctioned now and it's attractive enough, we've seen a lot of private equity jump into the fray almost immediately.
All right, Zia, Mody as well as Manisha, Girotra, enough and more action happening on the deal street, which will keep all of us occupied for the rest of the year, it seems. Thanks so much, ladies, for joining us on Big Deal. And thanks to all our viewers. Keep it to CNBC TV18.